What's up everybody, it is Jason here. Now today I want to talk to you about a very important number. No, it's not your SIN number. No, it's not your girlfriend's number. It's not your boyfriend's number, and it's not those digits in your bank account. This number does though affect your finances, and that number is your credit score. Now, credit scores are numerical values that banks and lenders use to help them decide if I give this person money, how willing are they going to pay me back on time? It's also determined as a risk number, or it's also called a risk factor number, because it's the amount of risk that you have in terms of repaying the debt that the bank or lender has given you. Now, there are 5 components that make up a credit score. Let's take a look at these 5 factors now. 1. Amounts owed. How much of your total credit have you used? Less is more. Lowering your debt earns you a better credit score. Number 2. New credit. Have you opened new credit lines lately? Opening several credit accounts in a short period of time will lower your credit score. Number 3, length of history. How long have you had a credit history? A longer history of responsible credit use will earn you a higher credit score. Number 4, types of credit used. Do you have more than one credit line? Having responsible experience with different types of credit, i.e. a car loan and credit cards, will help your score. Number 5, payment history. How often do you pay your accounts on time? Late payments will lead to a lower credit score. Now, having a lot of credit lines open is not necessarily a bad thing. For me personally, I like to keep a Visa and a MasterCard, and maybe I might open up another credit card just as a separate account. But in terms of lines of credit, I have lots. So let me tell you what I do to manage my credit, and my credit score is above 800 right now. So when you have debt, you want to look at debt to income ratio, because that debt to income ratio does affect your credit score as well. So for example, if you have $5,000 on a credit card and your debt to income ratio is skewed, just say your mortgage broker mentioned that. A quick tip of what you need to do is increase your line of credit on that credit card so that your debt to income ratio goes down. So the debt versus the total amount of credit that you're given goes down. Of course, don't use all that, and that's managing your credit score. Another tip that you can use is opening up different lines of credits at different banks. Slowly over time will eventually build your credit, especially if you want to get into real estate investing. You need to have quick access to capital. Go to one major bank, open up a line of credit, and then do another one maybe next year and another year if you have time. Now, there is a simple rule. You can have multiple credit inquiries in a 30-day period, because what Equifax and TransUnion will look at is you're just a savvy buyer, you're shopping the rates. And those multiple credit inquiries can be squished in the 30-day period. They will only look at your credit score in total as a one hit. Now, another thing that folks are afraid of too is like, when I go speak to a bank or a mortgage broker, they're gonna pull my credit, it's gonna look bad. That's okay. As I mentioned, if you're gonna go shop the rates, you need to do that kind of within a 30-day period altogether, right? Don't go 30 days and then look for a line of credit, and another 30 days look for another line of credit, 30 days another look for a line of credit. That will detriment your credit score. So either do it on a long-term scale, maybe once a year, or do it in a short-term period and see what you can get, and then just pause and then just hold off on that. Now, what happens when you have a bad credit score? Something that's below 680. Now, in Canada here, if your credit score above 650, 680, then you're not too bad. But if you're below that, you can't really get a loan unless you have a larger down payment. And I'll get into the different types of the pillars of home buying with how credit score plays into that in another video. But for example, let's just say you have a bad credit score. How do you manage that? Let's talk about right now what you can do to manage your finances to improve your credit score so you can start buying real estate. First, find out where you stand. The first step towards developing a better credit score is to determine where it currently stands. Start by checking with the 2 major credit reporting agencies, Equifax and TransUnion. You are entitled to 1 free report per agency per year, and you have the right to dispute any mistakes, so request that each reporting agency send you a copy of your report. Next, figure out the facts. Credit reports in hand take a good hard look at the data in front of you. Credit reports are rarely as spotless as you think. That one late payment on your Visa can stay on your report for up to 7 years, long after you even forgot about it. After identifying any discrepancies, you need to eliminate them. A dispute form is usually sent along with your credit report, or you can request one online from their websites. Make sure you document each step that you take in clearing up your report in case you need to back it up later on. Fortunately, the law is on your side, stating that any item that is not verified as accurate must be removed from your report. Next, call in the cleanup crew. You've cleared up any errors, but there's still a few legitimate dark spots on your credit report. What's a person to do now? Clean it up. Identify any debts that are still pending and set up a plan for eliminating them. Clearing up debt can take time, which makes it even more important to get started immediately. Remember that you have the right to add any remarks on your file, so take the opportunity to defend yourself and point out positive areas of your report, such as highlighting a loan that you've paid on schedule. Fix, rinse, and repeat. Time is your best ally when it comes to your credit report. Consistent payments, no matter how small, so as long as they meet the minimum, prove that you are responsible enough to repay loans as promised. Over time, they will outweigh the negative points on your credit report. Next, get regular. In order to avoid any ugly surprises, check your credit information regularly, especially 60 to 90 days before any major purchase, like a car, home, or, of course, investment real estate. Prove reliability. For upping your credit score, taking out a loan that you don't need and then paying it back in short span of time can prove that you're a good credit risk. Too few or too many. The ideal position is to have a few lines of credit, never more than what you can actually afford to pay off with your income, and none of them maxed out. Cancel all credit cards that you never use, but don't max out one giant line of credit by putting your entire debt on it. Prove your self-control by having between 2 and 4 lines of credit with a minimum or no balance on each. So I hope that proved a little bit helpful for you in order to get your finances ready, get your credit score in check and in order so you can start buying real estate and start making that generational wealth and that passive income. So if that helped you at all, please hit the like button below. Please share this to a friend that may need some help with their credit score. And of course, always subscribe. It does help me with the algorithm that I can keep producing content that you folks enjoy so you can start making some money in real estate and get yourself out of the rat race. Until next time, I'll see you guys on the next video.